Happy Friday, everybody. That's Brian McCarthy at Compass. Here today to bring you our weekly market monitor. Today is the end of the second week of October. It's Friday, October 15th. And I have some nationwide market data that I'd like to share with you guys today, and some slides to go through. Today is the one day a month, or the one recording per week that I do kind of a larger dive into the national housing market, and compare it to ours. So without further ado, let me get started here. I'm going to share my screen. All right. Let's get started with a good old quote. This is from Bill McBride at Calculated Risk. Said, "My sense is that the Case-Shiller national growth rate of 19.7 is probably close to a peak." That's what we're going through right now, which is crazy. And that year over year price increases will slow later this year. I think if you are keeping your eye on the market, if you've been watching these videos the past couple of weeks, you'll notice that, especially in Hudson County, we are seeing this trend. So they're spot on. July 2021 year over year house appreciation. So we're looking back here a little bit to get that number he was talking about. Federal Fair Housing, the FHFH, having a hard time talking today. Index 19.2, CoreLogic says up 18. That Case-Shiller says 19.7. So they're all pretty much on track with these upper teen digits. Price appreciation year over year at the end of Q2 nationwide. Feel free to pause this slide if you want to check it out in other areas, but New Jersey up 19.5. So right there in that national average, pretty crazy. So another one by Ivy Zelman of Zelman and Associates. Closings are set to decline roughly 10% year over year in the second half of 2021. And home appreciation is on the cusp of flipping to a decelerating trend. So for all of my nervous buyers out there that are, keeping an eye on this kind of stuff and thinking prices are really going to drop soon, that is not what this quote is saying, and that is not what we are expecting, and that is not any of the trends that we've been looking at so far. It's just a deceleration. So instead of, let me go from this side. If you see me over here, things have been going up crazy like this, and now they're going to decelerate but still climb. That's what we're going to see over the next couple slides. It's not actually going to start dive bombing down here. So now is still the best time, better than, a month from now or a year from now, to buy. You know who I'm talking to. Estimated home price performance here for the next couple years. So the deceleration, this is what we're talking about. Appreciation is still going to continue to climb, just at a less crazy rate. So 2021, 11.74. That's what they're expecting the average to be at the end of the year. 2022 down to almost 6, then almost 4, 3.5, and 3.5. So housing appreciation is still going to continue to perform, just not at the crazy increase that we saw from last year to this year. Expected home value change, cumulative through 2025, pretty awesome, almost 32%. That's what we're expecting here. Annual average above 5% year after year for the next 4 years. So buy now. It's a great investment, having your home and not paying rent. Pay your mortgage instead. Have an appreciating asset, especially as things are inflating. Prices are inflating around the country. How about Q4 this year? Another quote by Diana Olick, CNBC's real estate correspondent. Fall is usually the start of the slower season in the housing market, but nothing is usual about today's pandemic-driven housing market. That is for sure, if you've been following us. Potential home buyers are seeing a slight rise in inventory and consequently rushing back into the fray. Mortgage applications to purchase a home jumped 7% last week from the previous week. That is the highest level since April last year. So good for those buyers getting approved and getting out in the market. Home sales had been pretty difficult to forecast, and that's kind of what we're expecting here through Q4. As you can see, through 2019, very average. 2020, pandemic year, huge dip around lockdown here, April, May. And then as soon as things started opening back up, there was a huge drive for people, who had been shut up in their homes, realizing they needed more space or whatever they needed, getting out of their current situation and finding the home that they really need. 2021 has seen this. I would say, if you're watching my arrow here around Hudson County, it's gone like this to here and now down a little bit. But at the end of July, right here, I'd say September, October, we're probably right around here. And this is a big question mark over here, the last Q4. So nothing normal about 2020. We just kind of talked about that huge dip and then a huge increase. So it's kind of hard. We are comparing things year over year, but it is, that pandemic year was a little crazy, very unique. Why it seems like things are slowing down? Well, because at the end of 2020, it was crazy up here, and right now we're kind of seeing a settling. But in reality, we're beating 2019, which was the last normal year of real estate, which is very good. Existing home sales numbers for each year in December. We're at the end of the year, going back from 2012, so almost 10 years. Existing home sales, 5,530,000. That's nationwide. Just below the peak here in 2017 when a lot of people were moving, but almost there. Active monthly listing count peaks since 2017. We have different colors for different years. So the peak in 2017 was August. Peak in 2018 was October, and then 2019 was in September. Active monthly listing peak in 2020 was April. The challenge moving forward. So if we're comparing to last year, 2020, huge increase at the end of the year, Q3, Q4. Listings the last half of 2020 went down. And this is just listings that were for sale, not necessarily sales. So when are listings going to peak this year? Pretty hard to say. We had kind of a trough here when there was a lot of bidding wars. Obviously, it's because there's a lot of buyers in the market and not enough supply. So another example of supply and demand. Where are we going to end up the last half of this year? We shall see. Are more sellers going to bring their homes to the market? I hope so. If you're thinking about it, trading up or cashing out and getting something else, please contact me. All right, 3 reasons we may see an increase in listings through the end of this fall, or through the end of the year. Pent-up seller demand. Homeowners may be more comfortable pushing their homes to the market as more and more Americans are getting vaccinated. We certainly saw that last year. New construction is starting to take off. So we had a huge drought. I don't think I have a slide for this today, but the last half of, or since the shutdown in 2020, there was a huge drought in new housing. Things were just, new development had completely stalled. We saw new development start to tick up again at the beginning of this year. And then there was a big lumber and material supply drought and we're kind of seeing that again now with the problems with supply chain. So there are more developers back in the market developing, but there have been recent problems this year. So, for example, the rising cost of lumber and materials that has evened out the last part of this year from that peak in, what was that, June and July. It got pretty crazy, very expensive to buy even just plywood, but that settled back down. And now the last half of this year, I was talking to the general contractors I know, they just have a hard time finding work. Like they have projects to do, but a lot of their actual workers are collecting unemployment and just happy doing that. So as our government kind of gets back in line and back to normal and people are coming back to work, hopefully new housing supply will continue to increase, but existing housing supply would help as well. And the end of forbearance will create new listings. So anyone that was unable to pay their mortgage and had filed for forbearance and that forgiveness, that is set to end and will probably lead to a small but increased wave of foreclosures. So instead of going to foreclosure, homeowners will be able to sell their house to cover their expenses of selling. That's either a short sale, or if it's underwater, or they're just sell it once they start having to pay, or they realize they have to start paying their mortgage again and they can't afford it. Let's talk about interest rates, because I know that's a big reason why people are in or out of the market right now. Single biggest risk to housing is the rising mortgage rates. This is Ali Wolf quote, chief economist at Zonda. Rising mortgage rates is a real possibility in the next year, and that could bring prices down. Furthermore, other economic, financial, and confidence challenges could also result in a drop or flattening of home prices, even with solid buyers in place. But a drop or flattening in home prices is far cry from the crash we saw during the Great Recession. I really don't hear a whole lot of talk in headlines anymore about a big recession coming on. I think people realize that appreciation just decelerates instead of popping. So mortgage rates since January 2020, so almost about a little more than a year and a half, 3.7. They got to a low at the very beginning of this year. They went up for a while, they've decreased, and now they're steadily increasing again. Average back over 3%. Sam Catter, chief economist at Freddie Mac. Many factors will lead to this increase, including the Federal Reserve communicating that it will taper its support of the capital markets. The broadening of inflation and emerging energy supply shortages will compound the labor and material shortages. I touched on that just a minute ago. So this increase is largely due to that word that we've been seeing, if you've been following any economic news, is the taper. Anytime you hear a taper, expect mortgage rates to climb a little bit. Mortgage rate projections. So starting with Q4 this year and going through the next 3 quarters into next year. These are the predictions from Freddie Mac, Fannie Mae, MBA, National Association of Realtors, and then we average all of them out. And they pretty much agree that things are going to go up steadily here over the next year. Not a crazy inflation, but right now they're hovering right about 3% for a 30-year fixed mortgage. But we're going to see that slightly increase, which will affect your affordability. Today's rates, I mean, this is just going back a few more years. So purchase power. Let's take 5 different scenarios of different home prices between 320 and 400. So between the rates right now, about 3%. As they tick up for that same house, you're going to end up spending $60 more with a quarter point increase, and then another 50, and then another 60, just as these tick up. So if you're on the fence about buying a house, I say get pre-approved and let's start looking. Another quote: homeownership is one of the fundamental ways to accumulating wealth in America. I have to agree. Hence why it has been integrally linked to achieving the American dream. Not only can owning a home provide a roof over your head and a secure place to live, but because mortgage payments are generally remain fixed while rents may rise over time, a home can also be a very effective hedge against inflation. You buy right now, and as it appreciates, as inflation happens around the country, your home gets more and more value and more expensive. Together, these factors can give homeowners an enormous advantage over renters when it comes to accumulating wealth. Very, very true. Potential growth in household wealth over the next 5 years based solely on the increase in home equity. So if you buy a home today at 350,000, we're looking at this over the next couple of years. That home, just based off of inflation and that around 5% appreciation over the next 5 years, would gain over $100,000 in value. All right, average days on market, pretty low across the country. Oops. In New Jersey, we are, let's see, we're in this lighter blue, 15 to 30. That's pretty quick. Average in the United States is 17 days. Crazy. Housing inventory. Seller traffic in New Jersey, they're calling it weak right now. Buyer demand. The drop in buyer demand we're seeing is pretty much par for the course during this time of year. While we're seeing a decline in showing traffic compared to this point last year, demand continues to exceed that we've seen in the months leading up to the pandemic, as we saw in a few of those charts a few minutes ago. Buyer traffic index in New Jersey, considering that stable by the National Association of Realtors. FICO score requirements have actually overall, I use the word loosened up a little bit through this year. So to qualify for that conventional loan, 753, now it's down to 740. That opens up the opportunity for quite a bit more buyers to get that, but there are definitely a lot of lending programs where you don't need that good of credit. FICO score distribution. I thought this was pretty interesting. Almost half of people that qualify for loans are below 750 right now. The remaining half are above 750, and 39% is between 750 and 800. Average FICO score for closed purchases by loan type. Conventional, this is up around 800, or a little bit more than 740. So if you're above 740 right now, you can definitely qualify for that conventional. All loans average at 740, FHA 676, and a VA loan of 720 FICO score. All right, that's the end of my slides here for the national housing market. Stay tuned next week. I actually posted, if you're interested, you'll see if you're on this site, Jersey Home Values right now, or you're watching this video. If you're on YouTube, follow the link below in the video, go over there. I have slides from every week prior to this. And I'm going to put some more slides up next week with our local housing market data like I do every Friday. But check out the tab that says past charts, past slides, past something. I don't have it in front of me right now, but that has all of my videos from before, as well as the slideshows you can flip through. So I hope you find that useful. I hope you found this informative today. If you are a buyer or seller on the fence, I invite you to let's meet, let's talk, let's make a plan for you in the next couple months or this year. I'd be happy to help you. I am a real estate advisor. I'm here to be your resource and help you in your personal situation however I can. Feel free to DM me on social. You can find me on Instagram at Brisays, Brisays. I am on Facebook at Facebook/Brian McCarthy Realtor here, or my email is bm@storyresidential.com. And my cell phone, of course, feel free to call or text me, is 617-851-9141. As always, I look forward to hearing everybody's comments and hearing from you guys. Take care. Happy Friday. Have a great weekend. And I'll see you next week. Bye.